Most traders draw fair value gaps like this. They see 3 candles, they mark the empty space, and then they think that this is the imbalance or this is the gap. But there's only one problem here. Candles only show you price. They do not show you participation. So what if the gap that you're drawing is actually not the real gap? In this video, I'm going to be showing you guys how to draw the real fair value gap using volume profile. Not just the ICT or the smart money candle gap. But what I actually mean is the actual low participation area where price moved too fast. Volume did not accept and the market left behind a true inefficiency. And make sure you guys stay until the end because I'm going to be showing you guys the exact NQ example where this helped me pass my Apex account. But before that, you guys need to understand why most traders are drawing this wrong. So this is how most traders draw their fair value gap. They look for a market structure impulse like this and they find a gap somewhat looking like this with price action. They would mark this and they see another gap over here. So they'll be like, okay, we would want to mark this area right here. Now, I'm not saying that this is useless, but it gives you a pretty good starting point. Now, the problem with this is that you're only looking at price. You're not asking the deeper question over here. And then the deeper question that you should be asking yourself is that, did the market actually reject this area or was there a lot of volume being traded in this area right here? Because if a lot of volume is being traded here, then this area is really not empty. So this is what I like to call that this place is not really the real gap until you see it with volume profile. This is where we turn our X-ray vision. So what I like doing is grabbing my volume profile tool, something like this. And by the way, I know you guys are very confused. Don't worry, you guys can do this with TradingView as well. So if you're going to be jumping to the TradingView over here, to activate your volume profiling, you're just going to be pressing this button right here. Select your fixed range volume profile and you can drag from the low to the high. Then from this on, you want to be following this secret settings, which is using ticks per row and have your row size to 2 and keep your value area as 70. So looking to this one, let's kind of grab this one right here. Make sure you enable value area high, value area low in their point of control. And look into this one, everything above here is outside value and everything inside here is inside value. You don't know about volume profiles, make sure you guys click this video over here. It's gonna pop up and I suggest you guys watch that. So yeah, so from this, you can pretty much see the gap as well. But with that in the way, I personally love using deep charts. So we're going to be using deep charts for this entire video. So now looking at the charts right here, this is where we turn on the X-ray vision. You can see that the price action shows you where the price truly moved. And a volume profile shows you where traders are actually participating. So looking over here, you can see there's a high volume node. So this is where big participants are taking entry. The same over here, still kind of like a high volume node. This is an area where participants are taking entry. And pay close attention to what you see here. You get to see a low volume node. And remember this, we'll be using this term a lot in this video. Then the next question you have to ask yourself is that where did price move through with the least participation? And remember the low volume nodes. Those are the areas where price moved through with least amount of participation from both buyers and sellers. So remember what I showed you guys a while ago. Let me make it simple for you guys. A very simple process that you guys can copy, which you guys can pretty much steal. So first, you got to be looking for a fixed range. So when I was looking at this, I already knew that this was a low. And looking into this, I knew that this was going to be the high. So when I saw that, I already understood that with this range that I have, you want to be plotting your fixed range volume profile from this low to this high, which I pretty much marked. Once you do that, you want to be looking for an area which you see participants did not participate and price move through. That is gonna be your first hint that there is actually a gap in that area. So looking over here, what do we see? Now we saw this beautiful gap right here, but you have to ask yourself what happened here. You had a lot of participation here, right? Full participation. Next, we have another gap over here. You can see this low volume node. But then, when you mark this whole thing, you don't have a very accurate and definitive area of the real gap. So looking into this, let's zoom in further and try to find with what we can see over here. What do you guys see here? Within this entire low volume, you had this one specific area, which is color green, by the way, that is kind of showing that this is the lowest volume out of everything here. It's the lowest volume out of everything. Now, when I see something like that, that is when I would like to put my horizontal line like this, where I would wait for the market to potentially come back in this area, because this is the real gap. So looking to this one over here, let's try to drag to the right side. And yes, over here, you can see there is some reaction. You're like, yep, that looks really good reaction. And then market went through. And now let's take a look. You have the real gap right here and you drew this gap. Now let's pay close attention to our real gap right here. The market tapped perfectly over here. If ever you set your limit down here, put your stops down below this low, and it perfectly tapped your level and then immediately reversed to the upside. If you would just blindly take all the gaps like this, that could have been a very beautiful high RR trade, or what people like to call bottom ticking. Now, this is where most fair value gap traders get trapped, because a candle gap can look clean, but then when you turn on the volume profile, you realize that there's still a gap above, to the point that the market did not pull back to the gap that you're looking at. Now, I know you guys are a little bit confused, but let me show you guys what I mean. We pretty much see that the market is going up to the upside, right? Now, I would pretty much call this my low, and this is going to be the new high. So look at the price action right here. I know that you guys pretty much can see this gap right here. Yes, that's fine marking that again, but remember, always use volume profile to confirm it. So we have this first gap that we saw, and then we have another gap right here. A lot of people would prefer to wait for the one down here because they think that it is a much bigger gap. It's much trustworthy. Well, let's turn on our volume profile. So we mark from this low all the way to the highs. What do we see? Right now, we see that there is an area here with low volume. This is the real fair value gap right here, which I would like to mark. And then we have another gap to the top right here. So if you see something like this, look at this. This is the real gap, by the way. Empty. There's legit nothing here. There's legit nothing. I know you guys can see that. There's nothing over there. So this would have been the next real gap as well. So the question that you gotta be asking yourself, if the market is very strong to the upside and you see there's a very clean gap to the upside over here, the market might retest on that gap and then start pushing to the upside. Now, the traders that are pretty much waiting over here, I'm not sure if they're gonna get filled, but let's see. Okay, perfectly. You can see how beautiful the market perfectly came back to this gap and then created this big impulse to the upside and did not even bother to come back for this gap down here. This gap might get revisited later on, but if you're playing with the momentum, you are just gonna get faded away. Alright guys, so quick note before I show you guys the real NQ example. If this is the kind of thing that you guys want help applying to your own trading, I'm opening a small private mentorship group. I'm keeping it limited because I want to actually focus on each person. Your chart work, your entries, your journal, and how you're applying the system in real market conditions. Inside, I'll be walking you through my full process. How I read order flow, how I use the volume profile, how I find real entries, and how I review trades. If you guys want to apply, join the free Discord below, open a ticket, and answer the questions, and I will personally review if you are fit to join us. Now, let me show you guys the NQ trade. So look at the charts right here. This is going to be the NQ trade example. And this trade was very, very important because it helped me pass my Apex account. But then again, I don't want you to be focusing on the result. I want you guys to focus on the logic. So you can see that this is obviously my low and this is obviously my high. What I did was pretty much mark the whole thing. And let me show you guys a secret that I pretty much only share to my students. But hey, I'll be sharing it exclusively just for you guys in YouTube. So looking over here, okay? Now you can see that there is a low volume node. And I know that there's an area right here with no volume at all. This is the real gap. I pretty much marked this. But if you have a cluster, pretty much like this, right? A low volume node, a cluster of two low volume that's very close to a gap, I pretty much love marking that level. So I just pretty much grab this entire level right here because the thing I love doing is waiting for entry confirmations. Okay, I personally love waiting for confirmations. If you guys don't know how to use confirmations yet, make sure you guys click this video because I have a full in-depth strategy of my confirmation. So once you have this level, you can see that prices perfectly bounce in this area more than 3 times. The first one, the second time, the third time, and then the cherry on top before the massive rally over here. And yes, if you don't believe me, I took this trade right here. Make sure you guys watch my short. I pretty much took this execution.
Took a buy over here, stops below this low, and I was pretty much targeting a very simple 1-to-5 trade over here. Something like this, targeting it as high as this. Maybe that was like a 1-to-7, or I think, yep, around 1-to-5. And that was a very, very lovely setup. All because I was able to pretty much mark the real gap. If I didn't have this volume profile, what I would end up doing is pretty much marking just this level right here. I know there was a gap over here, but I would just mark this level, and I would also mark this level, but I would probably be scared because you won't know which gap. There's way too much gap, guys. There's way too much gap. There's a lot of gap. There's a lot of gap in the market. And when there's a lot of gap, there's a lot of noise. That's why you use your volume profile to be able to see where the clarity is in the market, which you guys can see over here. So now we're going to be jumping into the quick checklist recap. If you want to draw fair value gaps the way that I look at them, I want you guys to be using this very simple checklist. Number 1, find your trading range. Number 2, you want to be pulling the volume profile from the low to the high of the range. Number 3, locate a low volume gap or look for a low volume cluster gap. Number 4, mark the actual usable gap. And number 5, wait for a confirmation. You can use any confirmation you want, or you use my AAE entry model. Number 6, only enter when the market gives you confirmation. Do not use the fair value gap by itself if you want to increase your win rate. Remember guys, do not use fair value gap as an entry by itself. You want to be using it as a location. The confirmation is what turns a location into a trade. If this gave you an aha moment and you realize that you have been drawing fair value gaps from price alone, then this is exactly the kind of system that I'm going to be teaching inside the mentorship. We're going through volume profile, order flow, real entries, trade journaling, and how to build a repeatable process around this. If you want me to help you apply it to your own charts, join the free Discord down below, open a ticket, then answer the questions and I will personally review if you guys are fit to join. And if you are not ready for that yet, that is completely fine. Start with this checklist. Price shows movement, volume shows participation, and the real fair value gap is where the market moved but did not accept. And I'll see you guys in the next video. JCAC out.